Well, good afternoon, everyone. I'm Nick Kerigan, Head of Innovation at Swift, and it's a great pleasure to be back here at Finovate Europe 2026. In fact, it's always a privilege to come and speak here, because we don't come here to sell you a product. We come here to share a vision, and we're here at a very exciting time for our industry. So, we're going to be talking about tokenization, the journey from novelty to maturity. Those who were here last year may recall that I said that digital assets were ready for takeoff, but were still on the launch pad. Now, a year on, tokenization has taken off and is set to skyrocket. And to be clear, this is not a story about the price of crypto. This is a story about institutional adoption. The financial services industry has come a long way and collectively shifted from experimentation to execution. This is now a pivot point for the future of financial services. Tokenization was once a buzzword, but is now gathering real momentum. In fact, at Davos, just 3 weeks ago, tokenization was the central conversation. Leaders such as Larry Fink and Bill Winters highlighted its inevitability and its necessity. And I particularly like the quote from Bill: "Eventually, all things will settle in digitized form." And as Brian Armstrong of Coinbase said, "Clear rules unlock trust." So the market consensus is very clear. Digitization of value is here to stay because people expect more choice and more utility. So why all this excitement? Why is tokenization now top of the agenda? To put it plainly, tokenization has a potentially transformative power in financial services, and in particular, in payments and securities. It can enable faster settlement, better liquidity, improved efficiency, lowered risk, and open up new opportunities. Let me unpack each of those statements a bit. Faster settlement. That means 24/7 movement of assets and money through digital tokens. Better liquidity can be created through enabling assets that are illiquid today to become tradable tomorrow. Improved efficiency can come through eliminating manual processes and reconciliations. Lowered risk can be seen through improved transparency of positions and balances, plus shorter settlement cycles. And new opportunities can come through creating the possibility for business activity that is hard to do today, such as intraday liquidity management by financial institutions, programmable transactions, and the unlocking of private market assets. As a result, we're starting to see real institutional flows with tokenized deposits and funds moving on-chain. And in parallel, we're starting to see new business models emerge around digital assets and around programmable money. Now let's talk numbers. Today, the value of tokenized assets across public blockchains, when stablecoins are included, amounts to around $333 billion. Citibank predicts that the stablecoin market alone could reach $4 trillion by 2030. But as you can see behind me, Statista believes that the value of tokenized markets together could grow to something like $10.9 trillion but in that same year. And with Standard Chartered predicting a potential value of $30 trillion by 2034. Big numbers. And right now, over 40 banks are actively participating in a collaborative effort to design the global infrastructure for tokenization at scale, an effort which I'll delve into deeper in this address. So, why is this all happening now? After all, many of us who've been in the blockchain space have been working on it for over 10 years. What are the real unlocks happening here? I believe there are three converging forces behind this developing momentum. First of all, institutions are moving from trials to live activity. Tokenization has reached a point of institutional maturity where it's no longer seen as speculative or experimental, but as core financial infrastructure. And therefore, institutional and public sector engagement is accelerating, and tokenization is seen as an acceptable tool for capital formation. Second, regulatory clarity is emerging across major markets, with legislation such as the Genius Act in the US and MiCA in the European Union. This clarity can enable institutions to adopt with confidence and certainty. And third, policy relevance. In other words, policymakers have realized that the future of the financial infrastructure is of geopolitical significance, and that tokenization and blockchain can play a key role in that future state. So what could that future look like? Well, no one has a crystal ball, least of all me, but I think the core components of the next generation financial stack are becoming clearer. At the top of the stack will be, as today, a trust layer of governance and regulatory compliance. But in the future, that trust will be verifiable, not only based on authority. Privacy will need to be built in and preserved through that trust. In the middle of the stack, the trends of tokenization and AI are likely to converge, with quantum-proof ledgers powering programmable money at scale and with resilience, and with the activity on those ledgers being managed by autonomous AI agents, as we've started to see with some of the AI demos here today. And of course, lower down in the stack, rich data will be necessary to enable the ledgers and the AI, and the recent successful migration of the payments industry to the ISO 20022 standard creates the framework for richer structured data to flow across this infrastructure. And now, 97% of payment instructions cross-border flow in the data-rich ISO 20022 format. Crucially, this stack is not about building everything anew. I would challenge those who say that we need to start again from scratch to create the financial internet of the future, because we already have many of the components we need today for this future financial stack. I therefore believe that this vision will be created by collaboratively evolving today's financial system, building the rails with new technology that seamlessly interoperates with existing scaled infrastructures. And that's where Swift comes in. For those who are less familiar with us, Swift is the way that the world moves value. While fragmentation is a major barrier to scaling tokenization on an industry level, Swift already connects 11,500 institutions from over 200 countries, creating an unparalleled reach of 4 billion end customer accounts globally for corporates, SMEs, and individuals alike. This network already operates at very large scale, moving the value equivalent to the world's annual GDP every 3 days, and doing so resiliently and securely with what we call 5 nines of availability, 99.999% available to meet the needs of our clients and their customers. And we're not standing still. Over the last few years, we've significantly upgraded the capabilities of our infrastructure with a strong focus on operational excellence. Now, 75% of payments across the SWIFT network reach the beneficiary bank within 10 minutes, often within seconds, well ahead of the G20's target for the speed of cross-border payments. As we go forward, our focus is on enabling interoperable, secure, and compliant ways of moving value. Our community relies on us to provide strong, dependable foundations that keep the global financial system moving. And we believe in a future that will be multi-asset, multi-rail, and multi-chain, where existing networks will interact with new networks and forms of value, and where money will be able to go anywhere real time. And with SWIFT at the center, enabling that interoperability across different rails and forms of value. So we're building a future here at the intersection of TradFi and DeFi, where money moves anywhere in real time with trust. So whether a payment starts with a conventional bank deposit or a digital token, we aim to be the common denominator that ensures it reaches its destination effortlessly and securely. And the goal, therefore, is to deliver instant and frictionless payments for everyone, regardless of asset, rail, chain, fiat, or digital, and underpinned by the resilience, trust, reliability, and that the global financial system relies on us from SWIFT. And to get there, we're now focusing on two linked priorities. First of all, we're enhancing today's rails to deliver a best-in-class cross-border payments experience at scale. And that means putting in place a payment scheme that will deliver greater certainty of experience for our clients' customers. Second, we're building the rails of the future to ensure interoperability, unlock liquidity, and have real-time settlement 24/7, 360 days a year, 5 days a year. And these rails will be powered by a new blockchain-based ledger. So let's focus in on that ledger. As things stand, the tokenization landscape remains fragmented with isolated systems and persistent liquidity challenges. At SWIFT, we've been exploring the potential of blockchain in payments for nearly a decade. And 2026 is about moving to delivering those interoperability capabilities at scale to allow institutions to access and transact tokenized assets and digital cash. But we're now working towards a unified solution. Our ledger will combine the benefits of blockchain technology with trusted identity, governance, security, and standards. It will act as a coordination layer, providing a shared reference state of transactions, orchestrating settlement across existing and future systems to enable real-time cross-border payments use cases. That means it will capture the balance sheet, liquidity, and regulatory advantages of tokenized deposits and accelerate cross-border payment times to near real time, converting bank-specific tokenized deposit schemes into a globally interoperable network, which enables real-time liquidity allocation across regions and assets. And that will then create the foundation for programmable settlement, enabling banks to expand transaction banking, treasury, and market making in an on-chain world. It's a global effort, and it's being co-designed with over 40 leading financial institutions from over 16 countries. It spans diverse geographies, regulatory environments, and business models. And we believe this collaborative approach is key to arriving at solutions that are both realistic and scalable. The approach we're taking to achieve this is highly practical. Starting with an MVP, the ledger will evolve in phases with a focus on adoption. Key topics, among them interoperability, standardization, and liquidity efficiency, are being tackled together. We will establish a phased roadmap that expands capabilities, connections, and participation of the ledger over time to achieve scale. But don't just take my word for it. As an article in Forbes said only on Friday, I quote, "We reckon that SWIFT believes it can leverage its strengths as the paramount international financial messaging service to become a leading blockchain infrastructure provider. If predictions about stable coins are correct, by creating a bridge between traditional correspondent banking and new technologies, SWIFT will secure its preeminence in the next big cross-border payments evolution." So, to sum up, tokenization is on a journey from novelty to maturity. Institutional adoption, regulatory clarity, and policy relevance are converging forces, and we are working in close collaboration with the industry to deliver what works at scale. The opportunity is transformative, as long as we continue on a path defined by interoperability, trust, and standards. And SWIFT's role in this is clear. We're working together with the global financial community to evolve the rails the world already trusts, so that however value is moved in the future, it does so securely, seamlessly, and in an instant. Thank you very much.